you know. So I'm paying more than what I was supposed. Yes,
8.3%. And
yes.
you got the loan at how much?
Um,
From your bank, from your own bank
so
now.
I'm paying more than.
I know what I'm saying. The car could have given you is 8.3%, but
Yes.
from your own bank financing it now, how much did you give? How much is the original loan before what they could have been?
So the original loan was the total loan was 42,
No, what I mean
42.
the interest. Now you took
Okay.
the money from your
Okay.
life insurance. The loan you took is at what interest from your life insurance?
The loan I took from my life insurance is 2 point something percent, like
Wow,
2.5. But
wow.
I'm paying more than the 8% because I should have been paying 8.3% to the loan company. And
Okay.
that was calculated to be $750 per month. So I'm putting
Okay.
$1,000 into my own bank, which
Oh
is
wow.
so I should have
Wow.
ended paying about almost $60,000, and I stuck with the loan.
Wow.
So yes,
Guys,
so
that's what we're talking about. What
I
knowledge
should have
does.
paid, yes, I should have paid almost $60,000 into this car. And I paid those people. Now I'm putting that into my own bank. So,
That's correct.
and that could
So
have not have happened if I'd not read this book. I didn't even think about it. I came back, was like, wait a minute, I'm reading this book. I have to go back and do something. So, thank you
that's
so
correct.
much.
Thank
Mhm.
you, Dr. Biska, for sharing. Guys, these are the stories we need to start sharing. Even on social media, we need to start sharing these stories so that people don't just sit down and deceive others. We're reading the book. Are you applying the book? I'm telling you, it's amazing when you're in control, when you take ownership. Can you imagine 8.3%, 2.17%? Where can such a thing happen? And you have no paperwork to fill. It's a phone call. Even if you have a paperwork to fill, you cannot compare it to waiting endlessly for someone to give you some kind of approval. The approval is the one you gave yourself. And now you have opportunity to even pay more and pay it off on time. That is amazing. Dr. Loretta.
Good morning, Dr. Ruth.
Good
Good
morning.
morning, everyone. So I wanted to share my own experience. Yes, I opened 2 bank branches, from the information I got from this book. And in addition, I also want to share the power of knowledge. That's the power of information, knowledge, and understanding. So from all I have learned and I have been learning, I encountered Company A recently, and Company A had some new additions. I was just at the point of closing up, a policy with Company A, and they added, additional, new stuff into their company. So I wanted to move because I was within that time of moving what I had with the old into the new. And I've always known, from the information I'm receiving here, that new, when it comes to what we are doing, new is always better because there's a reason why they are changing to the new. And so when I called the company, this was just within a week, and I told them that I wanted to switch over to the new thing that they have. And the respondent said to me, um, oh, we won't be able to switch you over to the new one because we've closed your policy. And I said to her, okay, so what about if I cancel my policy? And she said, you will lose all your money.
Mm.
And I'm like, really? I will lose all my money if I cancel my policy within a week? She said, yes. I said, what about the free look period? And she said, oh, yeah. So that with free look, we can do that. We can move it all over. So I was able to move my policy from the old into the new. And the reason is because I have the knowledge, I have the information, I am in the know. If I was not, I would not know what to ask or what to do. And this is the same thing we teach people. You know, when you make a call, oftentimes the people that answer your call are people at the front desk that do not know better. And they can give you any information that may make you lose, you know, what you intend for yourself. So this class, this school has been beneficial. And with this book, I am opening many branches, as many branches as I can, and I keep counting. Thank you so much for everything.
Thank you so much for sharing. I'm happy you did. So, as she mentioned, whenever you call any company, especially when it has to do with your money, please do me a good favor. You want to take time. Most of us want to rush about our money, your own. Remember, the book is what? Be your own banker. Becoming your own banker. You cannot become your own banker if you're not in love with details. You have to cross all the T's and dot all the I's. You have to do that if you want to win. Now, the person you're calling is a front desk. The person you're calling is an employee who is looking at the clock to go home. The person you're calling don't have the whole picture. So don't just take one call and you settle. Continue to go until you get to your destination, depending on what is your financial goals. That is important. And know the law. That is why I said if you're here, let me tell you, in United States and Canada, their financial state, their financial block is embedded in life insurance. So if you're here, you don't have a life insurance license. You don't even know what we're talking about. Go to the person that gave you this Zoom link and ask them, I myself want to be in charge. I want to take a license. I want to read the law myself. I don't care whether you're a physician, a pharmacist, IT, engineer. You own the whole world. You're the one that owns the whole Walmart. That is good. That knowledge, that foundation is going to help you in every area of your life. That is what you must do. It's not by force, it's a choice. But if you're really going to have absolute control, you want to do that. Mistake sticks.
Thank you, Dr. Ruth, and good morning. Good morning.
Good morning.
My experience is just like Dr. Biska's experience. I looked at my mortgage, and you know, the text document they give you, there's a lot of money written over there. But when I go to the actual account, there was less money. Then I said, let me go check with my bank. I said, I want to pay off my mortgage. And when they looked, they said, oh, you'll pay next year, July. I said, oh, thank you. They gave me the balance. So now I said, oh, my cash value had much more, almost, you know, more than what was needed to pay off that account. All I needed was like 18,000 to pay it off. And I had like 40-something thousand cash value. My experience, the one I want to emphasize is I called my insurance company. I thought somebody would come and talk to me. It was just a touch phone. They said, if you want a loan, press 1. I pressed 1. If you want it sent to that address, press 2. I pressed it. And if you want 15,000, just press 1500000 pound. I said, is this somebody's coming, you know? And I put what I wanted, 20,000. I put 20,000,000. They said, Thank you. That money will be sent to this address. Thank you very much. Bye. I was holding the phone. I kept on holding the phone. I said, how many seconds did it take? It was like, if I was going to the bank, they needed to find out, they needed my credit, everything. I even called my friend. I said, I'm still holding the phone. I did not even believe it. And guess how much interest rate? 2.7. If I had waited until next year, they said July, and what I'm paying, I was going to pay almost 8,000 more than what I'm paying now. What company will give me 8,000? You see what I mean? And now I will pay myself. I'll be able to just, and I needed that. I said, oh my God, there's even change from that 20,000. And when I called another company too, I saw that I had cash value. Guess what? When I called there, I said, what's your interest rate? Just like Dr. Ruth is saying, they said, oh, I don't know. I'm not sure. Can you call the main company? I said, there we go. That knowledge she's talking about. Some people don't even know. So I have to call the other company, but this is a different one from this one. So thank you so much. I benefited a lot from what we are reading.
Thank you. Thank you for sharing. Dr. Tega. Dr. Tega.
Good morning. So I'm sorry I can't be on camera, but good morning, everyone.
Good morning.
My question was, I don't know if you changed the link. I struggled to join this morning until I saw a new post and the number was different. Is this the new number now?
This link, we have used it for how many days now? Maybe you were clicking on the old link.
Yes, the one we used February 28th is the one I was clicking on.
Oh, yes. So we use this link on March 7th.
Okay, so this is the new one, my mistake.
Yes.
All right. I'm calling around now. Anyone who could see change to this one will join.
Yes. Daisy. Daisy, go ahead. Daisy.
Good morning. I'm so sorry that I will not be able to be on camera, but I just want to share.
All of you are paying me $2 million.
We're working on it. Thank you so much. So I just wanted to share with all these amazing people joining us. Sometimes when they hear a doctor, they'll think, oh, because this person is a doctor. But I wanted to share a story. I help a gentleman who worked in Trader Joe's, and anybody who knows Trader Joe's knows what they do. And he max funded his policy. Yesterday I went shopping and I saw him. This man is Grace, comes running, putting the stuff on the shelf, comes and give me a hug. Can I hug you? I said, sure. What you told me is true. My wife, when I was doing this, his wife didn't want to listen. So he understood and he took the policy. He said they were buying a house and he went and he called the company just to see. That's the word he used. He said, I just wanted to make sure what you told me is true. I called and he was able to take $65,000 from his policy. And his wife was just jumping. She said, oh my goodness. So this thing was, so I have an appointment. They're coming to Philadelphia and all that. So I just want people to know it's regular people. It's not like, this person is this and therefore I can't do it. So thank you so much for bringing this community. Everybody is on board and we should just spread the word. So thank you so much, Dr. Ruth. I can't thank you enough.
Thank you. Thank you. I appreciate it. All right. Let's go to the book. All right. Thank you so much for applying what you're reading, becoming your own banker. Tell yourself, going forward, nobody will be your bank. You're going to create your bank. You're going to maintain your bank. And you must, let me repeat that. You must make sure that you follow all the rules of the bank. What is the rule? You cannot rob your bank. If you take the money, you must pay. You must always check and balances, right? Must always check into your bank. You must make sure there's enough fund in your bank. There's no reason money is sitting more in your commercial bank than your own bank. Remember, you are the owner. And if you don't have enough bank branches, make sure you get enough bank branches. When you're getting bank branches, ask them, the one question you must ask is, what is the loan provision? Always ask, what is the loan provision? If your loan provision of your bank is too high, you may not win the game. Always think about that. There are different types of loans. You may have standard loan, index loan, variable loan. They call it different names. Okay? Then when you call them, you say, ask them, what are the types of loan you have and what are the loan provision for each of them? At what year, if I take a loan, if I pay it back, will I get a zero balance? Which means you took the loan, it was 3%, you pay back the credit to 3%. Ask that questions before you sign that document. When you're opening, yes, the ones you opened before, you didn't have knowledge. You are just trying to pay some premium. But now you have knowledge. As you're opening the new bank branches, the very first question you ask is not premium. Premium is not relevant, per se. What is relevant is, what is the loan provision? There are some insurance companies, their loan provision is 7%, 6%, 5%. I don't know if that is going to help you so much, especially if you're in a crunch. Okay? But look for, I personally, let me tell you, I'm not going to advise you what to do, but let me tell you what I recommend myself. I'm going to look. Any bank branch I'm going to, their loan provision must be below 5. At least one of my bank branches, no, 1, 2, 3, my 5, I have a bank branch, about 5 bank branches in one company. The reason is what? Their standard loan provision in the first 10 years is 2.75 when I do standard loan. It's 2.75. If I pay it back, they credit me 2%. So only getting that loan at 0.75%. After 10 years, from the 11th year, the standard loan provision for that company is 2%. When I pay it back, they credit me 2%. I get it at 0%. That is why I have more bank branches with them than any other company in America. That's my choice. Okay? That's my choice. So now I have diversified. I have about 4 of them or 5. But the other ones, none of them is up to 5. Some are 3.5, some are 4%. Some are, again, I'm talking about standard loan, fixed loan. Let me use the word, fixed loan. Okay? But where are my co-hosts? Okay, look for who. All right. So that is one thing you must take away from this book. Get your bank branches and know the what? The loan provision. Call and know the loan provision. It's imperative that you do that. All right. Let's go to page 82. What if I'm uninsurable? Hey, blah, blah, blah.
Okay,
What
stand
if
up. Stand up.
See, people are distracting us sometimes. What if I'm uninsurable? Who wants to read?
I'll read.
What is your name and where are you calling it from?
My name is Christine Nyambura. I am calling from North Carolina.
Okay.
All
Thank
right.
you. Go ahead.
So what if I'm uninsurable? And others have asked, what if I'm uninsurable? After all, not everyone is blessed with perfect health. For those people, consider this possibility. Father in 50 years old and is uninsurable or highly rated on account of occupation or poor health. He wants to adopt the infinite banking concept to provide passive income at his age of 70 for the balance of his life. Please notice that I did not say retirement income. I'm dropping that word from my vocabulary. Passive income is money that comes in every year and you don't have to do anything to receive it. In fact, you can't do anything about it. It just appears. Mother agrees that this is a worthy goal. She's about the same age as her husband, and they have a 23-year-old, Jill, who is in excellent health. To accomplish their goal, they decide to put $20,000 per year into a policy on Jill. $10,000 will go into the base policy, or the life paid up at age 64, and $10,000 into a paid up additions rider. They do this for 20 years, and father is now age 70. At this point, they decide to cease premium payments and to start drawing passive income in the amount of $28,500 per year. This is done by surrendering cash values of paid up additions. This income is tax-free until the amount withdrawn equals the cost basis of the policy or the premiums paid out. 15 years later, father is 85 years old and has drawn out cash values of dividend additions equal to the premiums paid into the policy. He has no cost basis at all. If he is still living at this point and wants to continue receiving tax-free income, he could simply switch to policy loans, which are income tax-free. Assume that he dies at age 85. Note that the cash value of the policy is $1,110,726. This sounds like life insurance on father, doesn't it? Father paid premiums for 20 years, then withdrew every dollar paid out on a tax-free basis and delivered $1.1 million to his daughter at her age of 57. In this illustration, the assumption is that Jill simply let the insurance company manage the policy for the remainder of her life. Therefore, no additional premiums. And at her age 70, she decides to surrender cash values of dividend additions in the amount of $150,000 for the balance of her life. Assume her death at age 90, and she has withdrawn passive income totaling $3.1 million. And she still delivered a $2.3 million death benefit to the next generation. All during the period of premium payments and withdrawals, Jill could have been using the cash values to finance automobiles, homes, and anything that your imagination allows. If she follows the principles taught earlier in this book, then the results would be much greater than depicted in this illustration.
Wow. Guys, I know you're here and we're reading this thing. It's sounding like you like Greek. Oh, they cannot insure me. What the book said is true. One option is to get a policy on someone. At the beginning of the book, it says on page 25, okay? It said, get a policy. It said, then why not open your own potential for buying all the life insurance on yourself that the company will issue? And then on all the persons in which you have an insurable interest. As long as there is an insurable interest, you can win. As long as there's an insurable interest. And if you have young people in your home, your grandchildren, okay, you can open policies on their head. That is a new bank branch. It is not debt. It's creating your own generational bank branch. Then the second thing you have to do is to teach these your family members how this thing works. If you have children that's 18 years and above, you need to help them to start reading these things. Okay? You need to help them to start reading these things for them to understand. So don't give up. Don't say, I'm not insurable. Then you leave all your money in a tax-free bucket, in a tax bucket. Guys, you know that the only, quote me if you want to quote me. This is on YouTube, you can read it anytime. The only bucket, the only tax-free bucket in US and Canada that is not in the volatile market is life insurance. I'll repeat that. The only tax-free bucket that is not in the volatile market is what? Life insurance. Now, what type of life insurance? You are not going to build bank branches with term policy unless you only want to build it for death. When the person dies, that money goes to your trust or something if you have one. But if you are going to build branches where you have to access money, it has to be a permanent life insurance. And in permanent life insurance, there are different types. If you go to whole life, it's fine, but note, you cannot withdraw money. You can only take a loan. You don't have flexibility in whole life. You are guaranteed for life, but no flexibility. In index universal life, you have the capacity of withdrawal and loan. You have the flexibility that traditional whole life do not have. And you have the flexibility in the premium payment that you may not find. So it's up to you, whichever you want to use. Start today. Tomorrow is too late. Another good news to some people is bad news, is that you can be uninsured. Your children too can be uninsured if you don't wake up on time. So don't delay. Investment portfolio, you don't need your health. It does not really matter. But for you to become your own banker in a protective environment, you can be your own banker in an investment portfolio too, just to let you know. Okay? But again, there is no guarantee that that money will be there. So if you don't want to find yourself in a volatile environment, variable environment, then you want to play the game of becoming your own banker in a protective environment. And in that regard, you must pass health physical. Unfortunately, your driving record must be clean. Your speeding record, your criminal record, your residential status. Do you know you don't have to have papers in America to do business? Can wake up and start a business. They issue you I-10, your tax ID, you do your business and make money because you're contributing to the economy. But in a protective environment, to engage in it, as the owner that want to be licensed, you must have papers. If you don't have papers, you can get policies. If you don't have paper in this land, you can get a policy. So if you're here hearing my voice in America, you don't have paper, you can still own your own bank. If nobody has showed you how to do that, reach out to me. My number is 469 487 3469. If you don't have papers and you've been in this country for more than 8 months, you can own your own bank. And when you own your own bank, you only have a contract with the insurance company, not with America or Canada. Just FYI. Okay. All right. Any question on that page, that chapter she just read? Any question, any comment? All right. All right, let's go to page 85. Point to consider. Who wants to read?
Hi, good morning.
Good morning, man.
I'm in Florida, South Florida. I have a question.
Yes, ma'am.
So if I want to buy a index universal life for one of my family member, and then should I have the money to put down or just buy it like a whole life insurance?
Say that again.
Okay. I would need to buy a index universal life, for example, on my daughter. So should I have money to put down, like $10,000, or just buy like it's a whole life insurance?
That's an excellent question. Whether you buy whole life insurance or you buy IUL, Index
Yeah.
Universal Life, they are the same. They are all insurance. Number one is an insurance, life insurance. Number two, you have to pay premium to service it. You must pay a premium to service it. Did you get that?
Yes.
And you may get cash value based on how you're servicing the type of premium you're servicing. So I said three things. It's a life insurance product that you may build cash value, that you have to pay premium to service it. All of them are life insurance.
Okay.
Okay?
Okay.
So,
Can you tell me your phone again? You said 469 487 3489.
3469.
3469. Okay.
So whatever you buy, you have to service it. Do you have car insurance?
Yes.
Do you pay premium every month, right?
Yes.
That is the same way, there's no difference. The only
Okay.
difference is that your car insurance is protecting your car. There's
I
no
have
cash
whole
value.
life for myself.
Okay? All right? There's no cash value in your car insurance. But in
No,
your
I have cash. I have I have cash value. I buy it with benefit.
no, that is not what I'm saying. I said
Uh-huh.
you have car
Yes, car. Oh yeah, yeah,
insurance.
yeah. Yeah.
The same way you pay for your car insurance, the same way you pay for your life insurance. It doesn't matter whether it's whole life. It doesn't matter whether it's index universal. It does not matter whether it's universal life or term life. Whatever life it is, you must pay a premium to service it. Okay?
Okay.
All right. All right. Any other question or comment? All right. So who wants to read? Points to consider.
I can read.
Yes, ma'am. What is your name? Where are
Carol.
you from?
Carol, Texas.
Okay.
There are only two sources of income: people at work, and people at work. Excuse me, and money at work.
Okay, hold on. I like that. Can somebody take note? There are only two sources of income. What is that? People at
People at
work.
work and money at work.
Choose one. Okay. Go ahead.
Right? In the typical American family, through the first half of the 20th century, the father worked outside the home and the mother managed the home, nurturing the family and instilling spiritual values as the children matured. Now, it is widely accepted that a family can't make it without both spouses working outside the home. It takes two incomes just to make ends meet. Could it be a fact that this modern family has no money at work? Two, if you knew at passive income time that you'll be getting back everything that you paid into a system tax free, would you object to putting money in it? Three, when you get paid from your work, you put all of it into someone else's bank and then write checks from the bank, from the account to buy the things of life. So someone else's bank gets all of your money. If you own a banking system, wouldn't you want to run all of your business through your bank?
No.
This is so. Then life insurance premiums paid each year should ultimately equal annual income. This can be done immediately. It will take the average person about 20 years to reach this level. If this message is taught to succeeding generations, then a perpetual banking system can be achieved.
Did you all hear that? It will take 20 years. How many of you here have canceled your policy because you just opened your life insurance cash value yesterday? The next year, you want to come and take money. It will take 20 years, but most of us have not even started. In owning your own bank, you have to be patient. Patient is a virtue. You have to be patient. You will start, at least from 7 years, you can start messing around. But for you to build a solid background, it will take 20 years. And somebody walk up to you and say, oh, you have cash value life insurance. Did you see, didn't make any money yesterday? Cancel it. You that attended this class and read books, you know the law, and you're canceling your policy, you are the one losing. So if you're on this call, on no condition will you cancel your cash value life insurance. On no condition. On no condition. And anybody walk up to you, to your house, to your children, and the only thing they're going to tell you is, that the agent did not design that policy, well, cancel it, work them out. They do not have your best interest at heart. They are actually the most ignorant person on earth. Because no insurance company is going to sign any contract with you if they have not ensured that all the T's, all the I's has been dotted. None. So don't fall a victim of someone else's ignorance. That is why I insist that everybody must have a life insurance license. So you know the law word by word, not according to too many social media. Not according to too many social media. But you know the law that governs the policy, the bank you have in your own state. Don't be a fool. 20 years. Why will you even cancel it? Life insurance was meant to be for life. It was meant to be for life, right? So if you cancel it, are you telling me you're dying today? Are you telling me you're going to die today? Michael, Dr. David. Mr. David, I'm making you a co-host. All right.
Okay.
Okay. So please do not cancel your policy. You are cheating yourself. You're losing when you cancel your policy. You're interrupting you're starting afresh. You are starting afresh. It's not a good thing. Please. If you cancel your policy, you remain a perpetual customer to commercial banks. That is the truth. And you're not going to be able to achieve cost-free, tax-free, and stress-free retirement. You will not. Because there is no other tax bucket. There's no other financial bucket that is outside of the volatile market that is tax-free. Annuity is not a tax-free bucket. Annuity is not. There's no other bucket, quote me, any day, anytime I will tell you. None. It does not exist. Roth IRA is in the volatile market. You can wake up, you have 2 million in Roth IRA, you can wake up the next day, it disappeared. And guess what? You can't sue nobody. Nobody. And then what is the highest you can put in Roth IRA? $7,000. That's the highest. If you reach 60 years and above, they may give you additional 1,000. I've forgotten what is called Roth IRA in Canada. It's the same. They're the same bucket. So don't be deceived. By the way, life insurance is not investment. It's a protection. So don't say, if I have take this money, I put it in my stock, I will make 2 million. But you forget you wake up and lose the same 2 million. And your stock does not have death benefit. Your life insurance have death benefit. Your stock does not have living benefit. Your life insurance have living benefit. You're in control of your life insurance. Your stock, somebody's stroke of a pen can wipe away everything you did all your life. So teach yourself to be in charge of your own family finance. That's what the book said. I don't know if anybody can remember the page where he used the word absolute control. Take absolute control of your own word. Don't be so busy. If there's anything else you must take absolute control is your finance. If you don't have money and be in control of your money, you cannot be a good Christian, cannot be a good Muslim person. You cannot be a good father, good mother, because you'll be stressed up all the time. You're thinking, where will money come from? There are money coming into your hands. But what are you using it for? You're paying for Netflix. That is watching somebody's video. Who is watching you? What if you can take that money you're paying for Netflix, go and put it somewhere in your policy, then watch YouTube free? You can do that. You're paying for television, but you're working 48 hours a day, not 24. If you work 48 hours, who is watching the television? What if you cannot subscribe from the television? Put the money in your policy. It's all about repositioning. All right, go ahead, sister.
All right, thank you, Dr. Ruth. When government creates a problem on onerous taxation and then turns around and grants you an exception to the problem they created, any tax qualified plan, aren't you just a little bit suspicious that you are being manipulated? Tax qualified retirement plans were all created under the guise of giving you a break. First, there was pension plans for corporate employers. Excuse me. First, there was pension plans for corporate employees, and then came HR10 plans for partners and sole proprietors, and finally, IRAs for individuals. Now, everyone had an exception to the IRS code. If the government really wanted to give you a break, all they had to do is cut out the taxes. Do you really think they want to do that? 5. Wealth has got to reside somewhere. Where would you prefer to have it reside? Real estate, Then take a look around and see what happens when one needs liquidity. Real estate is very much a frozen asset. The stock market? Then try reading from my recommended reading for those interested in the stock market on page 91 in this book. Until you have done so, are you qualified to make an intelligent decision about such
You can let it
action?
happen. Right. If it, because
Go ahead. Sorry about that. Where's the person reading?
I'm sorry, I was muted. Okay. Or free contact, excuse me, or free contract. Let me take the stock market again. The stock market, then try reading from my recommended reading from those interested in the stock market on page 91 in this book. Until you have done so, are you qualified to make an intelligent decision about such action? Or free contract with other free persons, life insurance. From this base of financial operation, you can do any of the other things in life that you
I think
desire.
they are not sure.
All right.
I don't want to mute everybody.
6. Okay. Can you
Go
hear
ahead.
me?
Yes.
6. You finance everything you buy. You either pay interest to someone else or you give up interest you could have earned elsewhere. Excuse me. You finance everywhere you buy. You either pay interest to someone else or you give up interest you could have earned somewhere and elsewhere. There are no exceptions.
Did you hear that? And as long as you live on earth, you finance everything you buy. So the question is, will you rather pay someone to finance, or do you want to be Dr. Biska or Mistake 6 or every other person that are applying this rule? You can never be a party to this if you don't have a cash value of life insurance. If you're not qualified, get a policy on someone that is close to you, that you have an insurable interest on. Be the owner. The most important thing here is owner. The insure is not really relevant to you. If you want to play the game of becoming your own banker, the most important concept here is what? Who owns the policy? Even if you're 100 years old, you can own a policy of somebody as long as you're alive. Who owns the policy is the only person that owns the thing. Ownership that makes the rule. So there's nothing like it's too late for me. No, it's not too late. Own a policy on someone. Remember, when we talk about banking, we're not talking about term policy. Are we saying term policy is bad? No. It's up to you if you want to buy a term policy. But if you're going to participate in what Ness and Nash is talking about, guess what? You must own a cash value of life insurance. And which one will I recommend? I will recommend Index Universal Life. But even if you have low whole life, you can also achieve the same goal to some level, but term life is not going to do it for you to be your own banker. Because what is in the term life is designed for someone else when you have gone, when you are dead, not while you are alive. But if you wish to have a bank, if you wish to have a bank that will be there when you're 75 years, 85 years, 95 years, 100 years old, then your term policy is not going to do it. You start today. Yeah, yesterday is gone. Don't worry about the yesterday mistake. Don't worry about what has not happened yesterday, but start today. Start now. Go to the person that gave you this Zoom link. They probably know one thing or the other. They know how to reach out to me or reach out to any other person that gave you this Zoom link, go to them first and say, how can I start my own bank? You can start your own cash value life insurance with $25,000. What I mean that you can start a policy of 25,000. You can start a policy of 50,000, 100,000, 250, 1 million, 100 million. Is up to what you can be. Approve, number one. You have to be approved. You see how they deceive the middle class to take off of the main discussion. A discussion that knows that you have to be approved is not automatic. And they're trying to channel our discussion. Even a 20-year-old will tell you, oh, auntie, I'm doing stock. I'm doing day trading. I'm doing night trading. There's nothing wrong with that. But what do you even understand the system is all about? What are you trading? What are you trading? Start with the foundation. What's the foundation? Protection. Life insurance is not investment, it's a protection. But it's a protection portfolio that have the capacity to become your own bank over time. At least in its 7 to 20 years of existence of that policy, for it to really act as your own bank in the real sense. So before you start running to investment, start with a foundation. Anybody that tells you you're wasting your money, sorry, let them know that they are the ones that are ignorant. You can call me. You can text me. I don't know what to say, but our children, our young folks are perishing in front of us. Please, help them, bring them to this book club. Let them read. Give them the books to read. Investment is good, but start with the foundation of protection. And that is why the current president or chairman of a Security Commission owns 54 universal policies. 54. But he's in charge of crypto and all that. But you already have 54 universal life policies seated, orchestrated, created his own bank. And somebody else is saying, oh, he's in charge of crypto. But you didn't know that he had a foundation. There's something he has where he don't need to pay taxes. Every income, every gain he makes in crypto, he takes it out, he dumps it into his universal life. Don't you think so? And he leave the rest to keep doing what he's doing. You accumulate money in investment, but you protect your money in protection portfolio. So if you accumulate money investment, you have to put it your protection to protect it. But if you don't have the protection, where are you going to put it? It means that you have to remain in the volatile market for the rest of your life. No peace of mind. So you need both. It's not all. You need what? Both. But your protection comes first before your investment. Okay? All right, go ahead. Wogo Chuku. Go ahead. We can hear you. All right, go ahead. The person reading, go ahead.
All right. Number 7. Your need for finance during your lifetime exceeds your need for life insurance protection. If you solve for your need for finance through life insurance cash values, you will end up with so much life insurance. You can't get it past the underwriters. You will have to insure every person in which you have an insurable interest.
Again, is repeating potential for you. Okay. All right. Who wants to finish our epilogue and glossary terms so that you will know what these things are all about? Another person.
Good morning, Dr. Ruth. Can I do that?
This is Chika
Yes,
Ogegolo
please.
from Chicago.
All right. Thank you, ma'am.
Thank you. Any illustration contained in this book does not represent the performance of any particular life insurance company or in no way implies guaranteed of any kind. These illustrations are simply teaching tools to show how life insurance can be used to achieve certain goals. The infinite banking concept is a teaching organization and is not affiliated with any life insurance organization, and in no way implies that a person will be guaranteed results comparable to anything shown in this book. No more than a school or professor at a school can guarantee a person financial success from taking a certain course of study or procedure. In fact, if a person obeys the principles outlined in the book, the performance can exceed the results that are depicted in these illustrations. Thank you.
All right. So that brings us to the end of the book. Take your own time to read the glossary terms, okay? The book recommended and all that. If you want to know more about the author,
Hello, Dr. Ruth.
yes.
Would you please tell me? I came in late. What's the name of this book? So, is
Yeah,
that Let's Read Together?
is Becoming Your Own Banker by
Oh,
Ness
that's
Nash.
okay. All right. Thank you
Becoming,
so very much, Dr. Ruth.
you're
Very,
welcome.
very informative. So you're saying if I have whole life, like I'm a veteran, I have VA life, I can just kind of okay. I mean, they just got me approved for 40,000. So I can get this insurance on someone that um, I'm related to that, I mean, I have, was that a vested interest in?
Yes.
I
Yes.
see. And
That's
mhm.
that's what the book is recommending, and I agree on it because I have it.
Ah,
Okay. I
ah,
have it so you can open a cash value. By the
yes.
way, you say you have VGL, right?
Uh, I,
VGL,
I, I have VGL. I have also, I have SGLI from my civil service retirement.
mhm.
And then the VA just, I don't know if this is a new a program. They call it VA Life, VA Life, and that's a group whole group or whatever.
Okay. So
Hmm.
the VGL you have,
Yes,
just to
ma'am.
let you know, that is a term policy. Okay.
It is okay.
So, and as you grow older every year, the premium have the tendency to go up depending on how it's structured. So you might want to
Hmm.
sit down and look at it again. Okay. Look at it
Yes,
very well,
ma'am.
but I'm happy you have something. That is amazing. Okay. But
Yes,
if you're going to engage in, again, recommendation, these educational purposes, if you're going to engage in becoming your own banker, you might
yes,
probably want to diversify your product,
yes, ma'am.
whole life, index universal, and all that, and see how the performance is. But all
Yes.
that matters is ownership. Who can you own
Ownership.
it on?
Okay.
Who
Hmm.
can you own it on? Owning it
Right.
on yourself is the best if you approve, okay? But if you
Mm.
think maybe, oh, you're 80 years old, I'm 90, I'm 70, I don't want to engage in paying too high premium because the older you are, of course, the higher the premium, there's no free lunch. Anybody that tell you there's free lunch, you ask who pays the bill. So if you think that, pick up a grandchild, pick up your children. Say, honey, I just want to own a new bank because all I need is to you be the insured. Whenever you're ready, you can hand it over to them. I'm not handing
Mm.
nothing over until I know their head is correct. If their head is
Okay.
correct, I cash out my money and eat while my life.
Okay. Thank you so much, Dr. Ruth.
You're welcome.
Okay.
All right.
So,
And
Dr.
yes,
Ruth, might I ask you a question? My name is Steve. I'm sorry, I've been listening to you, but I am off the camera for some reason, okay?
2 million.
That's okay, ma. You're making me get to that point. I'll pay in the future, you know. Just
Okay.
out of curiosity, because I've been listening, and I probably needed to have asked this question from my upper people, Ngo Bread or Mary Blossom. But let me ask why you're here.
Hold on before you ask.
Mhm.
This is book club. It's a
Yes, ma.
simple
It is.
club.
Yeah, it is the book stuff.
Hold on. It's open to the public. We
Mhm.
don't represent any organization. We don't represent anybody. We represent ourselves.
Oh, okay.
All right. So if you're
just-
gonna call company's name, can call a company A or B or C or G and all stuff like that. Oh, go ahead.
Okay, ma. Let me ask you. Assuming at that age one opens that account, say for example, Mr. Z, who is now say 70 years old and uses a daughter who is 20, if Mr. Z passes on, how does that money, how would one be able to get that money, being that the money is, the account is in the daughter's, that extra bank was opened in the name of the daughter who is 20 years old?
The daughter is 20 years old and is approved. He's an adult. So he can take over the ownership. Did you get that?
Yes, ma'am, and access the...
Of course. He has to just do the paperwork and take over the ownership. Because he's already insured, he's approved. You're not going through medical underwriting, it's just that the owner is no more there, right?
Yes, ma'am.
So, and because probably that policy is going to be the premium is going to be very low, right? So that child can be able to afford it. Hopefully there's a little thing on the head of the father that passed away that, okay, she may inherit also that is why that question you asked is very important. That is why you have to start teaching your children how this thing works. Most people that have policy before now, before we started this financial campaign and reading books, they are hiding these things. Their children is not even aware because they watch those movies that say if they know they will kill you. Anyone will kill you, whether they know or they don't know.
Mhm.
But when you begin to have this conversation in the open, that is not even a thought process because they know it's not all about debt. It's all about what? Creating a massive wealth that's based on a solid foundation. Okay?
Yes, ma'am.
Because by this time, this child should have been able to know that my dad have created a bank. Okay, let me give you an example. My children, they were declined, unfortunately, but I have one that is approved.
Mhm.
She knows her policy. She knows what is her policy because she have a license. She have a license. She understands what I'm talking about. Whatever the situation that happens to me, that only she knows what to do. You see what I'm talking about? That is where you, the parents, becomes what? Important to learn and champion this education inside your own home, not through social media. A lady was telling me his 18-year-old cancelled his policy. I said, that's rubbish. That's nonsense. It means that you, the parent, you are not taking your authority place in your home. What other nonsense are you talking about that your 18-year-old cancelled his policy? Where were you? Who owns the policy? They don't get it right now. So you should be the owner of the policy. Then when they get it, you cannot start. And how do you help them to get it? You go to channel in my house. If you turn 18, you must have a life insurance license before I do your birthday party. It's not negotiable. I'm not interested. Interested in what? How can you be interested in what you don't know? What do you know you're going to be interested in? You're not interested. That's why you're in school, right? If you're interested, if I wait for your interest, will you be in school? I'm going to send you to school against your own plan. Why won't I make you to learn something against your own plan?
Mhm.
You're telling me my child says not interested. You're 18-year-old, 19-year-old, that's sitting in your house, you're paying their bills. You know, American children, Canadian children, who says that? If you're going to achieve financial freedom, tax-free, cost-free, stress-free, you're going to put your foot down. Because if you don't teach them how it works, the day you die, they will squander, they will cash out all the money and eat, and that policy lapse.
It's true.
So what keeps the policy is the knowledge that you build in your house. Prayer will not do. If you like, pray from January to January. If you don't sit down and teach your children, hey, no, you're on your route to being forgotten the day you die. That's the end of it. Your children say may be homeless because they have no clue what you did. Okay?
Okay. Yes,
So
ma'am.
yes,
Thanks.
if you teach them, when you have this banking system, begin to involve your family members. Begin to let them know. Let them know. Forget about anything. Let's learn this system. America and Canada is a system. Let's learn this financial system. It's not taught in the classroom. The highest classroom you can learn it for free is the one you are in right now. And the one, nobody's your teacher. Everybody will teach ourselves. All right. Carol.
Thank you, ma'am.
Yes. Good morning once again, Dr. Ruth. I appreciate you for this knowledge this morning. My question is the same question the man just asked, but it's a little different. What if the person is younger and it's not up to 18 and you are the owner and the owner of the policy passes?
Good question. So most insurance company have what they call, I think, premium. I have forgotten what they call it. Call your insurance company today. Number one, who is, do you have what they call contingent owner? That is one thing you can do. Make sure you have contingent owner in that policy if the child is younger.
Okay.
If you have that contingent owner, that is one. Another thing you can do is you can file for custodian, have a legal custodian that you can add to that policy. Another thing you can do is the insurance company have the call, there's a clause, there's a rider. I have it in my head, but it can't come out of my mouth right now. Trying to coordinate.
As a pay your rider.
Pay your rider.
Yeah.
Most insurance companies have the call pay your rider. Call them and say you want to have a pay your rider. A pay your rider is a rider where if you have it in a child policy, let's say you are the one paying for that policy and the person dies, they will not cancel that policy until that child turns 21. The child takes over the payment of the policy. Okay? So those are the things you can do. Contingent owner, legal custodian, and pay your rider if they have it. So you need to call and make sure you're there. That's a very good question.
What
Okay?
about the beneficiary?
The beneficiary the beneficiary has no control. We're talking
Okay.
about ownership
Owner.
here. Okay?
Okay.
Beneficiary has no business with the policy unless the person dies. So they're irrelevant in ownership. Give me a second. Let me get my charger. Give me a second, right? Okay, go ahead. All right, Dr. Linda.
I have a question though. So
Yeah.
what if someone that didn't have this knowledge and they made their child minor, I mean whatever, not minor, a child an owner of a policy? I know you can switch from the adult to the child to become the owner. Can you transfer? Can you go back and try to undo it, learning, having this financial knowledge, and you say, oh no, I want to become the owner again? What is the process?
You just call the insurance company, they send you paperwork, you fill it out.
Okay.
You can transfer ownership, yes.
Oh, thanks.
You're welcome. Pat.
Yes, Dr. Ruth.
Yes, ma'am.
Good morning, everybody.
Good morning.
My brother that spoke before, I know you said we are the parents, we should control our children.
I didn't say that. I didn't say control your children.
No, okay, we should be able to convince or any way you put it, advise that they have to do this.
Yeah.
It's not that easy for some children. You have to pray to have the kids that will listen to you, especially when they're 18 in this country. Even the younger one, they say you can force a horse to the river, you cannot force them to drink water. I know it's the approach. It's not that easy the way you're approaching it. That's what I'm trying to just say.
Okay. So what I'm trying to say is not to control them. I didn't say it's going to be easy. If your child is already 18 and they have left your house, I didn't say it's easy. No, it can never be easy. But you yourself, equip yourself first. Get the knowledge, master the craft, understand what this whole thing is all about. And gradually make this conversation a normal kitchen table conversation, a normal dining table conversation. Gradually start, bringing them into the conversation and say, yeah, they're going to act as if they know more than you because you started late. For those of you that have children that their children is still less than 18, and the earlier you wake up, the better. Because when your child turns 18, you're your own. But those of you that your children is 18 to 50 and 60 and 80, what we're saying is we want you to champion the conversation. But you cannot champion what you don't know. So go and learn yourself first. Engross yourself into the learning of financial system. The children take more time in learning the social media. You take your time to learn the financial system and bring them. Don't fight. If you fight children, you're not going to win. What I mean by is I mean that you have to gradually find it. If you know how you communicate with them, start that conversation gradually and start it with facts. Initially, your children are going to tell you it's a scam because they have never sat down to read these books. They don't know the law. They're only watching 2 minutes video of people that doesn't look like you. So it takes a while for them to do what? For them to understand. But continue. Don't stop. Don't say, I give up. Continue to be on it. If your children are still at the point where you can own, you can even own a policy for a 27-year-old, 29, 30. Depends on what is going on.
Yeah, the policy we can hold, but asking them to come and study and get the license. I think that aspect of it. Okay. The other thing I want to
is with time. It's with time.
With time.
Okay.
Yeah, that's what I'm learning now. The other question is you just mentioned. I was thinking about even before I entered the class. Instead of boy policy, why not just take money out your equity and invest your money of the whole? Then my mind told me, yes, you could do that, but you're going to pay for it. To get that money out from your house, you have to refinance or you have to pay money to the financial agency to give you your money. But with the insurance, it's not like that. You don't have to pay money to them to give you your cash value from your money.
You don't have to pay nothing. As long as you have it, you can get it.
Yes.
Yes.
That was the revolution to me in this.
Okay, so now you have that revolution. How many people around you are you going to help them and say, listen, real estate is good, though. It's money. But guess what? The day you need 10,000, you don't have 10,000. You're going to find a buyer. You're going to go find something or do something and get the money out. Or your tenant has to pay their rent.
Yeah.
God bless you. Have a good tenant that is what? Paying.
Yeah.
If not, life insurance is the only cash flow product that exists if you know how to fund it the right way. And be patient. Remember, I said 20 years.
Yeah.
Patient. Most of us were coming late. All right? So be patient. That is why people like Paul Akis, the people that have it, now understand that's why they have it, because that cash flow is there. It's not going to take you 1 month, okay? Unless we're dealing with, because I have a case now, I'm dealing with employee. You call this employee, they're doing this, so we're trying to get something out. But sometimes the employee related is not the company problem, okay? I'm happy you're here. I'm happy you're getting it clearer. Go begin to introduce it to your kids gradually. Okay? All right. Cooper.
Dr. Ruth, is that?
Yes. Yeah, Cooper. All right.
Good morning.
Good morning.
Ruth. Thank you so much for taking the time to educate all of us here. I just wanted to give a comment. Can you hear me?
Yes, it's breaking out though.
Okay, yeah, I just had a comment for the parents who are asking about their younger children when younger, not children, but kids. There's a book I was reading, that suggests to create a trust. And then you can put all these policies that you're creating, you can put them in a trust. And if anybody, there's a new person in the family, in the trust, they create a new policy for that new person. If somebody dies, they use that money in the trust. There's also guidelines as to when we can use that money and how and conditions. So trust comes to be, the kind of the watchman over the wealth that you're creating for your family.
Yes, but the
Mhm.
question is, Kuba, the
Mhm.
question is this. The
Mhm.
trust is when the person has gone. But the question is why the child is insured. Remember, if
Mhm.
I'm the owner, I died, I'm not insured, there's nothing pays out. Okay? So the discussion is who continues the oversight of the policy when I am gone? Because my death has nothing to do with the policy in terms of the payout. My having the policy today is to create a lot of cash value that I'm going to use as my own bank. But all of us is going to die one day. Me, my contract is 120 by God's grace. So all the pastors say amen for me, eh?
Amen. I think I
Yes.
think what my sister is trying to say, put in a trust. You can make the trust the owner also. They can be paying because they
Okay.
continue. Then you have to have a trustee and that will be managing that trust.
Okay,
Who will
that is
continue paying the
that
premium?
is true. That is true. If
Yeah,
your trust can be your owner, but how
yeah.
many of the middle class have a trust?
That is what we try to create.
Uh-huh.
It's
So
difficult.
please go do your trust. Okay. So
Yeah.
add it to the 4 elements I mentioned. I mentioned contingent owner. I mentioned custodian, having a legal custodian, payer rider, and now trust. Trust is the best of all.
Yeah.
Trust is the chief chairman of these 4 elements. Okay. So do your trust and make your trust the owner if you want to. But also make sure you find out all the legal parameters around that. Okay, don't just do it blindly. Do your own due diligence. Okay, there are different types of trust and all that. Make sure you do your own due diligence to get it done. Okay, good one right there. Miss Abraham, Loma
Yeah.
Abraham.
Yes, thank you for allowing me to. I just wanted to add to what you said, Dr. Ruth, to the mother. Is of course, trying to say yes, the kids of these days, right? Because they don't understand a lot about what we are learning here. They tend to want to,
And hold on,
deceive.
hold on, Miss Abraham.
Yes, ma'am.
The reason they did not understand is because because money is only taught at home, not at school. And we did not start from day one to teach them. We are starting late in the middle of the road when they have learned every other thing from somewhere. That is why if you have young kids who are not 18, you're lucky to be in this environment. That's the reason. Go ahead, Miss Abraham.
Thank you, Dr. Ruth. I was just going to add that you can take your older kids to what we call it, like if somebody is doing their presentation or in-person presentation, let me put it that way. That was what I did with my 18-year-old. So as soon as my son was turning 18, right, 17 and a half, and so I took him to a presentation. We had to travel a little bit. He went. I was already telling him, but he didn't grasp the whole picture until he went for. Both went together. He heard for himself. He was really impressed. I'm telling you, he was taking notes. He was really impressed, and now he's licensed. So yeah, so that also can help by taking them so that they can hear for themselves and see other young people. And gladly, when I took him, there were other young people who also showed up. So that kind of really kind of pumped him up, and he was encouraged, and he did the exam, passed it first time, and he's licensed now.
Awesome. Awesome. So that is what I mean when I said influence your children. Those that are older now. Get them to events. They may not hear from you. Okay? Take them on a date. Oh, there is event going on in Las Vegas, honey. Please plan to be there with me. Buy them a suit and say, I want you to wear this suit. We are going on. Incentivize them some way, somehow, to get them to a place where they will hear from someone else, not from you. Okay? Bring them to book club like this. You say, honey, if you can join me in the book club, take a note. Guess what? That your phone you want me to buy. I'll buy. Just connect it to something just to get them to hear. Incentivize them. Take them somewhere. Get them. Both of you can read this book. You can say, honey, there's a book we're going to read this month. Our goal is to finish this book this month in this house, me and you. If you agree with me, we read it line by line, we discuss it. I'm going to give you $50, $10. Do something. Be creative and make it fun. Not fight. You're not going to win if you fight. You're going to lose. Okay? All right. Miss Cecilia.
Morning, Dr. Ruth.
Good morning.
Good morning, everyone. Sorry, I'm driving. The lady that was saying it's not easy to get the adult children into this, getting a license or getting a policy. That's true. In addition to incentivizing them, you can actually put a little guilt feeling to them. That's how I got my kids. Mine, where they were all in the 20s before they got their first policies, and they all pretty much have license right now. So the way I got them is, they like to give presents every birthday, every anniversary, and all that, and so they will ask me, Mom, what's on your list? I put life insurance number 1, life insurance number 2, life insurance number 3. Then come to my birthday. Mom, what do you want for your birthday? 1, life insurance. 2, life insurance. 3, life insurance. Then after a while, they stop asking. They stop asking. She said, well, we don't need to ask more because she's going to say life insurance anyway. Then they will buy me whatever they want. But after that, after I did this 3, 4 times, one day they came home. They were out of the house. They all gone out of the house. One of them came home. I called the agent. I had made an appointment, and I told her somebody's coming to talk to you today at 10 o'clock. They have no choice. They sit at the kitchen table. They listened. The lady wrote $1 million policy. The next time the other one is coming home, I arranged. I'll come to the lady. I say, sit down, listen. After that, she wrote $1 million policy. So that's how I got all of them to have at least $1 million policy and have a license. So it takes time though, but you have to find the trick. If you put incentive and it didn't work, just put a little gut feel on them and say, what you're doing, I'm not gonna get you a present because take that money and do life insurance. Maybe it will work. Worked for me.
And
Thank
what
you.
she's talking about, these are physicians, pharmacists, ITs, movie makers. So it's not talking about just ordinary people who are just sitting there and watching movie. No, these are real adults, successful in their field. Okay? She made it work. I'm telling you the truth. All right. Ugochukwu. Ugochukwu, that is Ugochukwu now. So why the W there? Ugochukwu, go ahead. Ugochukwu. All right. Daisy, is that old man?
Ugochukwu's question is in the comment section. I think he's speaking, but we can't hear him.
Okay, what was this question? Can you read for
He
me, please?
said, I was talking, but you couldn't hear me. I have a question. I was told that unless you own a policy, you can't insure another person. But it seems I'm hearing something different. Can you please explain it? Explain that.
That is not
Yeah.
accurate. You can own a policy on somebody, especially your child, or anyone you have insurable interest. Yes, there is a limitation of what you can own on them if you don't have one. That one is true. But it's individual companies variation. All right. So start with the one that can allow you to own. You can own 250, you can own 500 if you give them a reason. Okay. I'm a licensed financial professional. One of the things I do is I'm an expert in a protective environment. I manage risk. And the way I help people to manage risk, I have had consumers where they want the policies, but they're not qualified. So I make a case with insurance company and say, this person wants $2 million policy, $1 million policy, but they were declined. Okay. And they want to get a policy on this person. I've been able to get $1 million, $2 million, whatever, 500, 250 on someone else where they are the owner. So it depends. Okay. You can own a policy on anybody that insurance company approve. So it has to be individual basis. It's not general. So it depends on the situation. But yes, you can own a policy on somebody. Depend on the case. The cases differs. All right. All right. Daisy.
Yes, thank you, Doctor. I don't know if this question is appropriate for this platform, but how can somebody use their policy to pay off their mortgage? I still don't understand that very much. Should I just let you answer?
No.
Okay.
I have the person that just did it. Miss Cecilia, please, can you answer that question?
Yes, I can answer that question. Mine is a life insurance, and I've had it for what, 12 years? 12 years. So, yes, I have 200 and something thousand in it. So I took 162 and paid off my house. So I don't have to continue to pay the mortgage insurance interest. You just have to keep it long enough, accumulate cash in it, then you can use it.
Okay.
So Daisy.
That makes sense?
Yes.
Thank you. So Daisy, is the same thing applied to you buying a car? Okay. And all that. Is the same thing that applies. You're going to borrow that money from your own bank. Okay. You're going to borrow that money from your own bank. When you borrow the money from your own bank, you now pay off your mortgage. So that interest you're paying, that money you're paying to your mortgage company, start paying it to yourself.
Okay.
But you have to have had that policy. The book said at least that policy will stay there for 7 years for you to even start, depending on how you fund it. But if you really want to enjoy it, he concluded by saying at least 20 years. But most of our people don't even have this policy, let alone to know how to fund it. They go out there, they watch 2 minutes television, social media that tell them cash value life insurance is a scam. They tell them buy time and invest the rest. Time is not wrong if you know the knowledge of why you're buying it. But if you're going to be your own banker, time policy is not going to do it. I'm sorry. You're going to have the same thing Paul Atkins have, which is what? Universal life or whole life, whichever one that works for you. But you have to be approved. And that's the danger. This is where the middle class have missed a lot. Because in protection, you have to be approved. Most people have canceled their policies. Now, when the knowledge increased, they came back. Guess what? They cannot be approved. So we are the victim of ignorance here. And that is why book club came to be. When I came and saw the nemesis going on, I said, I cannot just sit down and complain. I'm going to start a book club where it's open to the public. Anybody that wants to read, come and read. Licensed person, unlicensed person, as long as you make dollar, you must learn how the dollar system works. So we read books here just to help our community to learn how the dollar system works. But we don't teach you, we just read the books and follow the book prompts to engage in the conversation. All right? So thank you so much for asking that question. Got to be your own banker. If you have not started, start today.
Thank you.
The money sitting in your cash value life insurance should be more than the money sitting in the commercial bank. Because if you leave it in the commercial bank, they will turn around and put it in the same life insurance. So why not bypass the commercial bank and go to where they go to? It's that simple. But you have to learn it. So if you're going to engage in the banking system where you're the owner, why don't you get a license? So you know word by word, according to your state, what the law says about the banking system, instead of leaving it to someone to manage. Yes, someone will have to write the policy for you, but why don't you manage your own bank? The reason Miss Cecilia does what she does, because not only did she own the policy, she have a license, so she knows the law. She's not watching social media. She's not listening to 2 minutes video. She's reading the law word by word. And she have the legal capacity to engage. But most people here say, let me go ask my CPA. Let me ask my accountant. Let me ask my financial advisor. If your CPA or financial advisor do not have life insurance license, they cannot engage in protective discussion. That's the law. You can quote me any day, anytime. Thank you. Miss Pat, last speaker.
Oh, thank you. There's a little bit of discussion. I was thinking if I have to ask this in private or I should maybe somebody else the same thing. I don't know. Okay, this is the situation. If you have a license, now you want to write maybe buy insurance I do for your loved ones, and can you be the person that write the what they call it, the insurance, and still be the owner?
All right. The law says be careful with personal business. That's
Yeah.
all I answer you. The law say what? Be careful with personal business. The rest of the discussion can happen offline.
Okay. Okay. That's all. All right. Bye-bye.
All right. All right, my people. Thank you so much. It's been a wonderful journey with this book. Man, this author is really thorough. Go back, use this book as a guide to help you manage your own bank.
What is your author's name? I forgot.
That's Nelson Nash. Do you even have the book?
No, I think I need to have it.
You need
I
to
need,
read this book, Becoming
yeah,
Your Own Banker. He's a good
yeah.
author.
I need to read it.
So the next book we're going to read is What Your CPA Isn't Telling You.
Oh Lord.
Okay. Okay, now that's the
By
next
who?
book we're going to read. All right. So
What is
By
next,
who?
what is the author for that too?
the author is Mark.
Mark.
Yeah, is a CPA attorney at law. What your CPA isn't telling you. That's the next book we're going to read. And the next book club. So the next book club is going to be May 2nd.
Hi, do you have a dedicated WhatsApp group
Oh,
for the book?
sorry. My
Is it
apologies.
April or May?
April.
Yeah, I'm looking at something else. Sorry. The next book club is going to be April. This is 28, April 4th.
Thank you.
Okay. The next book club is going to be April 4th. All right. And we're going to start with what your CPA isn't telling you. I'm so curious. I've read this book before, but I'm so curious. I know there's going to be too many technical language here. So make sure you invite all the lawyers here. Okay. All the CPAs, all the accounts, all of them. Tell them to come that we need their help to understand some books because we must read. All right. Otherwise, I
Dr.
want to
Ruth,
say,
I'm so sorry to.
Me,
There was
allow
this one
me,
you
allow me.
mentioned earlier. What would the Rockefeller do? Are we going to read that book or?
we read it. You came late, sister. We read it. What would the Rockefellers do? So if you have not read that book, we will come back to it at some point. Okay. We'll come back to it. But you know, one thing I love that book is in that book that I saw there are 4 types of expenses. You know, you have consumption, you have destructive, you have protective, and you have productive. And since we read that book, my children, when they give me budget, they say, Mom, you have not funded a budget. I say, how do you classify it? If I see any destructive, I'm not going to fund. Okay. So yes, what would the Rockefellers do? We did it, we read it, and it took us a while. Something you have to know is that most of the book, I'm going to run, I have to speak right now. Most of the books, okay, were written back then before Index Universal came out. So most of them are focusing on whole life and dividend paying whole life. But I want you to know that every permanent life insurance is whole life and whole life modified. Don't get stuck because of the word. Index Universal Life came to operation around 1995. Okay? And all that. So don't get stuck. All permanent life insurance that have a cash value can help you if you understand it. In my house, if I have to have control over somebody, like my children, I'm not going to write them anything else except Index Universal. But that is me because I have the understanding of what it is. But you, it's up to you to decide whether you want to go with whole life universal, Index Universal. It's up to you. That is why I emphasize again, you knowing the law and take time to know what the differences are. Okay. Otherwise, I want to say thank you so much for coming to read it. I will see you April 4th. We're going to start what your CPA isn't telling you. Join us on the book club, group me. Follow me on Facebook, Instagram, social media, YouTube. What we're reading right now is live on YouTube. So if any of your family member or friend miss it, share the YouTube link to them. I will put it in the chat and I will also post it on the group me. All right. If you need help, let's help you. Okay. My name is Princess Dr. Ruth Federa. I'm a licensed financial professional. I'm a risk management expert and I manage your risk. If you are going to want to have your own bank by 100 years, term policy is not your option. That does not mean term policy is bad. You have the right to write anything you want to write that meets your financial goals. Do your trust. Please, human beings die, trust never die. There are so many trusts, you need to do your own due diligence and learn and do your trust. Bring your children to a financial discussion and pray that God will give you the wisdom to continue to learn. Otherwise, I love you all. I will see you guys. Somebody should put the group me link to the chat and let's continue to go and change the world. The middle class are taking over financial space. Don't allow your family to come late because the train is already off. It's up to you. There's nothing like I didn't know. We have given you everything. It's up to you.
Dr. Ruth, please, can you put the title of the book, the next book to read on the chat, please?
Okay. Is what your CPA isn't telling you. Somebody
Okay.
help me put it in the chat. Also
Thank
put
you.
it in the book club group me. Okay. Book
Thank
club
you.
group me and you find it there. Okay.
Thank you.
All right. Thank you so much. Have a good day.
Thank you, Dr. Ruth.
Thank you, Dr. Ruth.
Very
Thank you,
blessed to
Dr.
see you,
Ruth.
Dr.
Dr.
Ruth.
Thank you
Ruth,
very much.
God
Thank you,
bless
Dr.
you.
Ruth.
God bless you,
See you
Dr.
in the
Ruth.
next Zoom
Take
meeting.
care.
Thank
Bye
you.
bye.
Thank you.
Thank you.
If
Dr. Ruth is
you're
an
if
amazing
you're in
woman.
Houston, if you're in Houston, Texas, let's hang out. I'm in Houston. So if you're in Houston, Texas, let's hang out. Okay. Let's make this happen.
I'm in
Okay.
Florida. I wish I can be in Texas.
I'll see you.
I'm in Maryland.
I'm in Houston. When are we hanging out, ma?
Wherever you're available.
All right, text me.